Tariffs, tech stocks tanking, and the Fed throwing cold water on rate cuts. Yeah, this week wasn't for the faint of heart. But let's talk about what actually happened and what you can learn from it. The market's been wobbling all week with the S&P 500 in bear market territory. And while it wasn't a full-blown collapse, the swings were sharp, but mostly headline-driven. Here's a quick rundown. China raised tariffs to 125% in retaliation to the US increases. And not just on what's shipped, but where it's made. That hit some US chip makers pretty hard. Companies like Texas Instruments, Intel, and Micron all took a dive. Investors panicked, gold spiked to an all-time high, and the dollar hit a 3-year low. Meanwhile, our good friends at the Fed reminded us that inflation risk from tariffs could keep rates higher for longer. Translation, even with signs of slowing growth, don't count on relief from the Fed anytime soon. And in the middle of it all, earnings seasons kicked off with banks like JP Morgan reporting strong results, but Wells Fargo and others adding to the uncertainty. So what do you do with all that? First, breathe. Volatility doesn't mean that you're doing anything wrong. It's a feature of investing, not a bug. Second, stay diversified. One sector like semiconductors can't tank your whole plan if you're balanced. Third, stay focused on your plan, not the headlines. Because the market doesn't care about your goals, but your strategy should. This wasn't a calm week, and I am not undermining it. But it was a reminder, your future isn't built in reaction to chaos, it's built in preparation for it. And when you build with purpose, you're not just riding out the swings, you're learning to navigate your wealth and elevate your life.